Roy Robertson. Today on Good Business San Diego, we're joined once again by Brent Wilsey, president of Wilsey Asset Management, based right here in San Diego, which gives you the opportunity to schedule a personal consultation with Brent. And we'll tell you how you can do just that. And today we'll talk about what you might discuss at that meeting, your short-term or long-range investing goals and how it is that each may differ. Because they're not one and the same. I mean, this is part of an overall strategy, so talk about that.
You really have to determine, is there short-term goals that I have that you need this money in 6 months, year. Don't think that just because the markets are crazy, you should go into a CD or a money market or a T-bill. Yeah, they're attractive now, but never ever use a short-term tool for a long-term objective, which would be retirement, or I'll say more than 3 to 5 years. You want to be investing in equities.
And if you're doing that, it's just maybe you don't have a strategy. Listening to your podcast yesterday, no, the new catchphrase is T-bill and chill. Just get a T-bill and just wait, right? That's not a long-term strategy.
It's not a long-term strategy. And I give people reasons like, well, why? I mean, let's look at a couple of things on equities. You look at equities going back to 1930. 40% of the return in equities just comes from dividends, which means you've got to find those quality companies, your insurance companies, your financial companies, your food companies. That's why you're going to get those returns. Also, too, staying the course is very important because, yes, it gets kind of scary at times. And we tell people the difference between volatility and risk. Risk is where your money's gone forever and never come back. Volatility is just the up and down movements. And if you miss just the 10 best days out of the past 15 years in equities, your return went from a 10.6% return down to a 5.1% for missing just the 10 best days. And actually, if you missed the 20 best days out of 15 years, we're talking 15 years, your return went down to 1.6 from 10.6 if you stayed the course. Do not try to time the market because you're not going to get it right. And I believe you have a better chance of winning the lottery than guessing 10 or 20 days out of 15 years.
But you know, the amazing thing about this is you don't have to look too far back into history because this just happened, right? We had September, October a little bit slower, but if you would have jumped out toward the tail end of October, you really would have regretted it.
Well, and let me give you some days here. October 12th, 2008, during the Great Recession, one day the market moved up, equities moved up 11.6%. October 28th, 10.8%. March 24th, 2020, recently COVID, one day up 9.4%. What happened in those time frames? Your emotions were the worst, saying, I gotta get out because the recession, COVID, let me get out. And what happens, you miss those 10 best days, you're not gonna get a 10, 11% return because you miss those days. You're gonna get a 2%, maybe a 5% return because you tried to time the market. Wrong thing to do. Do not time equities.
It's all that overreaction, that too much emotion factoring into decisions that are going to punish you big time in the long term, right?
Yeah. Look at what you own. I always tell people it's the quality of the investments, not the quantity of trades that you do. Look at what you own and say, where will this be 2, 3, 4, 5 years down the road? That's what we do with our portfolio. We stay the course because we got good quality. We do all the research up front so we can weather these storms.
And this is what you'll discuss with people when they schedule this consultation. They come into the office, meet with you, and review some of this, understand a little bit more about your philosophy, meet your team, that kind of thing. Right?
And we just don't review it. We show them real documents on proof. We prove to them what happens. There's proof, there's facts behind there that we show people.
It's that fundamental analysis that you do.
Exactly.
And you do it all the time. I hear about it on the podcast every time I listen. It's the Smart Investing Podcast. It's Brent Wilsey. You can schedule that complimentary consultation by calling 858-546-4306. That's 858-546-4306. Or online, you can book it at smartinvesting2000.com.